Welcome to the Deposit Compliance Question and Answer Forum. My name is Jared Moyer, and I'm going to be one of the bankers compliance team here that's taking part in the program. We've got lots of people working behind the scenes. I'm going to try to tackle the questions with plain English answers. My teammate Diane Dean, she's going to be playing the role of moderator today, so she's the one that's going to be asking the questions as we go through the next hour. The goal to simply get to as many of your questions and provide plain English answers in the next hour. And then we're going to let you get back to what it is that you all do so well, and that's serving your customers. I also have in the background behind the chat function, Kyla Kroger. Now, let's talk about that chat function. The chat function is reserved for issues with getting into the program, audio, visual, things like that. Please, please, please do not ask your questions in the chat. They will not get to Diane to be held to potentially be part of today's program. Now, again, I can't promise we're going to get to everything, but I can guarantee you if you put them in chat, they're not going to be considered because we're watching the question and answer button. So if you have a question you want to submit, use the Q&A button to submit that question. We'll put that along with the many of you that took an opportunity to pre-submit questions. We have several of those. We're going to sprinkle a little bit of everything in so that we make sure if you took time to pre-submit, we get to some of those, as well as some of you that saved them for the program here today. The other thing about today's program is that within the Q&A in the chat, please don't try to answer questions, because then people are trying to pay attention to that and what we have going on here on the screen at the same time. And it's really hard to do two things at the same time. So if you would just refrain from that and just type your questions in, and we'll try to tackle as many as we can during our program here today. As I mentioned, as we led up to the top of the hour, if you do like that sort of interaction back and forth and you want to help others with questions, we've got a place for that. It's called our monthly connection. If it's something you want to learn more about, reach out to our team. You can phone us, you can email us, you can go through the chat and ask Kyla to put you on a call list. Somebody will reach out to you and we can even give you a sample version of that so you can see how that kind of goes. We'd love to have you be involved to be part of that monthly connection. With that, I think that is the housekeeping. If you don't have the materials, you're really not out anything. As long as you have a notebook, you just need a place to take notes. This is being recorded as well. I'll mention more about that at the conclusion of the program. But the agenda today, pretty simple and straightforward. We are going to try to provide plain English answers to your deposit questions, as many as we can in the next 60 minutes. So with that, I'm going to stop sharing my screen, and we're going to put all the attention on Diane. Well, I suppose Diane and me. She'd probably prefer it that way better. But anyway, Diane, you get to go first. You get to ask the question. We'll see if we can come up with an answer.
Okay, this first one is on Regulation DD, or the Truth in Savings Act. For tiered rate accounts, does changing a tier's minimum balance require advance notice to current customers? If we do need to give 30 days advance notice, what are our options for doing so?
So I didn't hear exactly what they were changing with the tiers within that question. So I'm going to make an assumption here that we're changing the tiers and somebody is going to be adversely affected by that. If that's the case, then they do need a 30-day advance notification. How you go about that notification, you could send them a full-blown truth and savings disclosure where you outline what those tiers are going to be, but you have to make sure if it's a full-blown disclosure that you highlight the specific changes. The other option is just to send the change in just a notification format, or if you could do it, I might be kind of tricky with something like that, but you could potentially do it as a statement message. So that's how we would handle that.
This next one takes us to a potential UDAP issue. Do you have any updates on the issue regarding charging multiple NSF fees on a single item when represented? And do you know if institutions are stopping this practice altogether?
Well, my answer probably would have been different 2 days ago. So in 2022, the FDIC was really the first one to put something out on the offensive, if you will, in writing, saying, here's what we expect. And we went through the whole, you got to do a look back, you got to do the restitution. If you don't, it's going to be a matter requiring attention. And FDIC banks were put on written warning, if you will, with that FDIC financial institution letter. We had not heard from any of the regulatory agencies until about a month ago when the CFPB put out their special supervisory insights on the junk fees. And one of the things they identified within the junk fees was this multiple representments, and their tone was a little different. They didn't get into the specifics of the restitution and reimbursement, if you will, like the FDIC did, but that was, if you read between the lines, what their expectation was. They talk about going above and beyond what the law requires, and then we'll maybe leave you alone. But there was a sentence in there that basically says, hey, anybody we've talked to about this, has essentially stopped charging NSF fees altogether, and that would really be our expectation. Now, I'm paraphrasing, but that's the way it sounds when you read what was in that supervisory insights. But again, that's the CFPB, right? And we had the FDIC. Well, what about the other regulatory agencies? Well, the OCC chimed in today, at least that's when it hit my inbox, same flavor as the CFPB. The FDIC gave some additional information on some other overdraft stuff as well yesterday. The flavor is this. My big takeaway from the most recent, I don't really care what your disclosures say. They probably aren't and won't be good enough. That's the flavor that I get from reading those recent documents from the regulatory agencies. Don't think your disclosures, even if you think you've described it well, are going to save you, because that's the language they're giving us as part of that. So stay tuned. There's more to come there, but it seems like it's becoming more and more of this is a bad fee, don't go here. We'll have to see what shakes out.
Okay, well, you have one on Regulation E. If we have any kind of EFT error, can we require the person to go to a merchant?
The answer is no. If it's an EFT dispute, error resolution, that sort of thing, you can't require them to go to the merchant first. You can ask them if they've been, but you can't require them to go there. There have been many previous UDAP, Section 5 FTC findings or rulings based upon that. A lot of guidance out there where that is redundant over and over. Don't do this.
And just to jump back a little bit, you said you had heard from the OCC on the multiple representments. How about Federal Reserve banks? Do you have any insight on whether they should just follow suit?
I mean, they probably should fall in line. I did talk in November of last year. I did a presentation in person with a group in Kansas. There was a banker there that was Fed Bank, and the Federal Reserve was in and looked at it, and they weren't doing it correctly. But they didn't cite them. They didn't make them do the reimbursement. They just had discussions with them on it. So I don't know if they're a little more relaxed on the issue or not. But that's really the only direct connection I have to something Fed related in that area.
Okay, funds availability. Can you address the ability to hold funds in a new account? And if we use it, how long those funds can be held?
All right, this is a pre-submitted one, so I went and dug and did my homework on this because not one I know off the top of my head. So cash electronic payments in the first 5,525 of next day items, you can hold till you have to make available next day, if you will. The amount over that stupid 5525 number, and it's going to change here soon, very likely, because the time change is coming for that. 9th business day, personal checks and on-us checks, it's your choice. Recommendation is 7 days would be a good choice there.
Truth in savings, Regulation DD. If a fee amount stays the same, but we change the name, do we need to redisclose prior?
So nothing in any current regulation is going to say you have to do anything there prior. But in this UDAP world we're living in, I'd want to know. I'd want to know. My answer might change depending on what you're doing. If it's something overdraft related, it makes my skin go, I'm not sure. So I'd want to know specifically what you're doing. And I think we take it on a case by case, but there's nothing specifically in a reg that says anything about that.
How about if we're removing NSF and overdraft fees? Are we required to notify account holders of the change?
No, you're not required to notify them. No. Now, is it a good customer service thing? Yeah, but I thought this question's come up. So I'm going to take away overdrafts and NSF. Do I really want to tell my customers we're taking that away? And is that encouraging them to then overdraw because I'm not going to penalize them? So I don't think I'm going to run out there and scream that, but you're not prohibited or required to either way.
Staying in the area of overdrafts, can you speak to making a decision to pay versus return an item? For example, do we need a process documented in writing? And what is our risk if we go outside of it?
So let's just imagine that the team here, the bankers compliance team, we're all working for the same financial institution. So it's Diane and myself and Kyla and Amy Kudlachik and Dave. He's back there behind the scenes today too. And I'm probably forgetting somebody that might be there. But anyway, we're all on the same team. And every morning we come into work and we have to work an overdraft list. If there's not a roadmap that explains to a certain degree how we do that, I might be deciding to return everything or return things that Diane just deciding to pay for the same similarly situated individuals. And the reason I use that wording, a couple things. Overdrafts, when you pay them, they become incidental credit for Regulation B, the Equal Credit Opportunity Act. Why do you care? Well, that's where the prohibited basis characteristics are from a fair lending standpoint. So there's absolutely a fair lending intersection there if we're not being consistent or if we're illegally discriminating based on those characteristics intentionally and more likely unintentionally. Because when you set similarly situated people side by side and they're treated differently, and the only difference we can see then is a prohibited basis characteristic versus somebody who doesn't have that, that creates a fair lending problem, and it doesn't have to be on purpose. Now, outside of Regulation B, then we have the new spin on UDAP, and UDAP including the prohibited basis characteristics from traditional Reg B. Now, it's not in Section 5 of the FTC Act, nor is it in the abusive portion of the Consumer Protection Act that is the Dodd-Frank version. But the CFPB, and if you read some of that overdraft stuff that just came out yesterday, the OCC's in on this. They believe that abusive, based on the policy statement issued by the CFPB just in the last couple of weeks, likely includes a lot of that. So I think you want a roadmap is what I'm going to circle back to. I don't think you want a free-for-all because you're just inviting a whole lot of risk to the table that you don't want. And with overdrafts being in the crosshairs, I think that could be a problem in the next exam.
This next one takes us back to Regulation E. We had a customer that saw an online ad for a puppy. She used her debit card to send payment through Venmo. And after sending the payment, the puppy seller stopped replying. The customer authorized the payment but received no benefit. Is this transaction covered by Reg E?
Well, that's really the last part of that question, Diane. The customer authorized the payment, but unfortunately didn't get the puppy. The key is the word authorized. They hit the pay, the send, the buy now, the whatever button. That makes it an authorized transaction and not subject to the Reg E dispute and error resolution rules. So that would be something that would not be on your plate based on what was provided.
Back to Regulation DD. Can we call an account free if we charge for paper statements?
I wouldn't. You can have a separate account where they only get statements that are paperless, but I would not have an account that is free and established that way. Did you just lose me? No.
No.
Okay, my screens all went black, so I'm glad I'm still here.
How do you recommend handling an instance where we've determined the disclosed APY is inaccurate?
So within the Truth in Savings Act, there's actually a percentage, a grace, if you will. I think it's I wrote this down. This is another pre-submitted one, 0.05. The other thing about Truth in Savings is it doesn't require restitution. But typically what we see is if you've made an error with the APY, they'll cite you for the Reg DD violation, and then they will threaten you with a UDAP violation if you don't voluntarily do the restitution. Now, you're going to want to figure out what the dollar amounts are, what the risk is there, and then make a risk-based decision. I've seen some banks say, for pennies, we're not going to worry about that. For dollars, depending on the amount, it's a bigger deal. It's a risk-based decision you have to make, but it's really a UDAP issue that is going to be whether or not you decide to do any sort of reimbursement.
We have a couple additional Reg E sagas. The first one, our customer had her debit card information saved in a fast food app on her phone. A food order was made through her phone app with her debit card and delivered to an address in a different state. She claims not to have authorized the payment. Is the customer or bank liable for this transaction?
All right. So if this person was in front of me, I'd ask a few more questions. And since I can't do that, I'm going to make some assumptions. So if this is, I have my phone right here, but this is my phone and I have an app on it for some food or whatever, fast food joint, and I've connected it to my card and it's in my possession. Okay, that's the scenario I'm going to give you. Now, Diane is in another state and Diane's the person that has stolen my information somehow, some way. And so Diane downloads the same app on her phone, but uses my login and my financial information to set up that app on her phone. And that's how she was able to conduct the transaction, yet the food is delivered in a different state. So that can happen, has happened. I've read other stories similar to that. So if my information was stolen and subsequent transactions were conducted based upon that, those are unauthorized. Those are covered by Regulation E.
Okay, this next one. The customer has possession of their debit card, but notifies the bank about multiple questionable charges with PlayStation. During the dispute process, we learned that a member of the family was previously authorized to make a PlayStation purchase, but charges have continued. What is the bank's liability?
Yeah, so PlayStation and even mobile devices, Reggie has not kept up with technology. Now, we want to be careful what we wish for in this area because I can tell you the CFPB is working behind the scenes on trying to figure out what to do with Reggie. They did some informal stuff at the end of 2021, I believe it was, with the FAQs. It's not on their rulemaking agenda, but trust me, they're working on some things behind the scenes. So my take on it's going to be this. When it comes to that PlayStation, there's fine print. Hey, I have a PlayStation. I actually have an Xbox, same thing. But downstairs in my basement, in order to set it up and order some of the games online, I have to put my card information in. And because I'm a compliance dork like I am, and I know how Reg E works, I'm like, you know what? I'm going to read this time. And I read the fine print, and basically what it says is that by entering in the information and leaving it in there and not taking it back out, in other words, allowing the Xbox to remember it, hey, I'm authorizing future transactions. That's an authorized transaction. Okay, whether I'm there doing it or my son does it this afternoon, tomorrow, next week, whatever, until I take the information out of the machine. Right? And there's a lot of hearsay that goes along with these, but based on what was provided here, I'd say that's an authorized transaction until you unauthorize the Xbox by taking the information out.
Okay,
or deauthorize.
Someone's asking for clarification on the puppy. The puppy that never arrived that was paid through Venmo. Where the buyer did not receive the puppy she purchased, would we need to process this as a merchandise not received for our customer?
Okay, so Reg E doesn't have anything like that. Okay, yes, it's an electronic funds transferred. No question, it's covered by Reg E from that standpoint. But is it unauthorized? And the answer is no, it was authorized. They hit the buy, the pay, the send now button, whatever it was on the screen, that makes it authorized. So maybe you've heard this before. There are a lot of people out there that will say, hey, when you're buying things online, when you're buying things out there, make sure you use your credit card. Why? There's more protections under Reg Z as in zebra than there is on Reg E as in elephant, right? And so Reg Z has a not happy provision. Hey, I wasn't happy. And if you meet certain criteria, you might get your money back. There's no not happy, didn't get it provisions in Reg E. If it's authorized, you're out of luck. Right? It's not covered, but it's not something the bank has to deal with at that point.
Okay, back to Truth in Savings Act. Can we increase the early withdrawal penalty on our certificate of deposit midterm?
The answer is no. That's contractual. You have to leave it at maturity, at the renewal time, then you can adjust things.
Can you touch on fees that would need to be disclosed under Reg DD?
This is another one that was pre-submitted, so I went and did my homework here. So I got my list from our training manual. Maintenance fees, fees to open or close the account, deposit withdrawal or ATM usage, special services. There's a whole lot that falls under the special services provision. We've got return check items, at least for the time being. We'll see where that goes. Verifications, balance inquiries. Let's see that there's sending consumers checks. That probably doesn't happen so much anymore. And then I'll throw overdrafts in there as well. That's really what the regulation gives us kind of at a high level as far as the fees that need to be included in your TISA.
This one takes us back to UDAP. What are some things to be on the lookout for when it comes to rewards checking?
I'm going to give you a phrase. When we teach this as part of our UDAP training, it's do what you say and say what you do. So if you're going to have this product, this rewards checking product, make certain that what you're advertising, what you're disclosing, matches up with what the system's actually doing. Okay? And so the fine print that you're having, all that, make sure it matches up with what's actually going on with the product and the service.
This next one actually takes us to Regulation D. Can we waive an early withdrawal penalty for no specific reason? And for example, just because management wants to?
You could, in theory. Now, you do need to remember that you have to reserve the right to, within anything withdrawn within the first 6 days, you have to charge at least 7 days worth of interest. So that part would be part of it. So you can't completely get away with it if it's in that first period of time. But after that, you could. Now, if you're doing it often, you might want to reevaluate the terms of your time accounts because they're probably not being utilized as intended, true time accounts.
We actually have a couple on Regulation DD and advertising requirements.
Okay.
If we put some information one click away, is it acceptable if the user has to scroll down on the page?
So one click is one click. So I click and it better be there. If I have to click and scroll, that's not one click.
This next one takes us to Regulation E again. Is the FedNow system activity subject to Reg E and EFT error corrections procedures? And what else can you tell us about FedNow?
So the Fed now is not something I'm all that familiar with, but my understanding is that those are the Fed, it's allowing money to be available quicker from financial institution to financial institution from my real high level what I've read in the past. My understanding is those are electronic funds transfers. So yes, they would be covered by Reg E. I don't know why they would be excluded, and Reg E hasn't changed because of that. So absolutely, I think they would be included.
Back to Reg DD. Does the Truth in Savings Act require an APY be rounded to two decimal places?
Yes. Well, let me do this. The rounded is 1/100th, and then when you're disclosing it, it has to be disclosed to two decimal points.
And kind of on those lines, is there a difference between a rate sheet we might give to an existing customer in association with an open account versus one we have on our website for sharing with non-customers?
If you mean different in that we might have different rates for accounts that we had available at a different time in our life, if you will. So we have have people that we have accounts with that were set up differently and they may have a different rate structure. And then we have something that's different for people to open up new accounts. Yeah, that could happen.
This one takes us to member FDIC advertising requirements. When the bank and a sister insurance company want to put up a billboard with both bank and insurance agency information, do we include member FDIC?
So member FDIC is to be included in general advertisements, like when the bank's name is being used. And that's what we have going on here with the billboard. And so I would recommend you have member FDIC. Now, we also have the insurance agency, and that's not FDIC insured. So there's a rub here, right? My recommendation is going to be clear segregation. So if you're putting this up on a billboard, maybe you split it 50-50. You put like a line down the middle of it or something like that. And you got bank on the left, you got insurance agency on the right. With the bank, I need the member FDIC. With the insurance side, I need the not disclaimer. So clear segregation with disclosures.
On Reg E, can you discuss authorized fraud and how banks should treat disputes filed in such instances?
So authorized fraud. So if it's the transaction was authorized and then the customer didn't get the puppy, that's an authorized transaction. Yeah, I'm sorry that you didn't get your puppy, but at the same time, you authorized the transaction. That's not one that's going to follow the Reg E red tape that you all have to follow for unauthorized transactions because it's authorized. If somebody is trying to defraud the bank, Reg E's out the door. So we'll call it your customer is trying to commit fraud against you to get money back for something that really they did authorize, but now they're telling you they didn't. Okay, and you don't have a proof of that. That happens all the time. There's scammers out there that know how Reg E works, and they'll try to scam their own bank out of money. If that's the case, then Reg E's out the door. It's not going to have to follow the Reg E error resolution red tape.
Staying with Regulation E, we had a customer contacted after trying to change her password to her Peacock streaming app and told there was a new lifetime use charge. Our customer gave information to the fraudster and the account was charged through PayPal. Would this be considered authorized or non fraud?
Okay, so they're leaving some things to my imagination with the question. So the part about the customer provided information to whomever it was that contacted them. So Diane reaches out to me and says, hey, we've got this new lifetime thing, whatever. We need your account information so we can begin to charge you for that. And so I give her my account information, and Diane goes and uses the information she's stolen from me to go conduct subsequent transactions. Those will all be covered by Reg E as an authorized transaction if there's really a theft going on here. Now, let me change it up just a little bit differently. Diane contacts me and says, hey, I need you to send us some money. And I go, oh. And so I hit the send button and I conduct the transaction. That's authorized. That's not going to be covered by Reg E. So there was a difference there. I hit the send button in the most recent scenario, as opposed to I handed Diane my information and then she went and conducted subsequent transactions with the information she stole from me. Those are all covered.
Another one on advertising and member FDIC. Are you required to include member FDIC if you do not mention a product or service, such as on a general ad that includes the name and address of our bank and shows support of an outside group or organization?
I'm going to ask you to repeat. For some reason, it cut out on my end. I heard nothing.
Are you required to include member FDIC on an ad not mentioning a product or service? And they say they're mentioning the bank's name and just a different organization within the community.
So again, our general rule is that we use the bank's name, we use member FDIC. That would be my recommendation.
This is one on Reg CC and funds availability. If we put funds into a savings account and place a hold on those funds for what we are comfortable with, is it recommended to still provide a hold notice?
So the Reg CC does not apply to savings accounts. Now, caveat, there might be some state laws that apply to savings account. And if you included your savings accounts within your funds availability disclosures, that might pull them in and then you have to do what you say and say what you do. But assuming you didn't cover them and there's no state laws, there wouldn't be any required notification of any sort if you had them place the money into a savings account and then you delayed the availability of that deposit. Now, good customer service would say you should have communication with your customers and at least give them a verbal, but there wouldn't be anything required by any federal regulation at that point.
This one takes us back to Reg E and notice of an error. How about an email from a customer? Is this considered written communication?
Yeah, I think any way Reg E is very broad with how you get notified of an error. And so if I drop by the bank in person, if I call you, if I email you, if I text you, now I know the reg doesn't say email and text, but those things would be included. It's any notification of an unauthorized transfer or dispute that's going to cause you to start your investigation process.
And as a follow up on this, they're saying their debit card processor requires a specific form. Are we required to issue provisional credit based on the email if we don't have that specific form signed?
So the email would serve as written notice to cover the provisional credit requirements, where you'd be required to give provisional credit if they gave that written notice to you within 10 days or within 10 days of the error, if you will, if you're following Section 11 of the Electronic Funds Transfer Act. As far as what your third party, your vendor, your service provider is requiring, they can't make you create a bar that's any higher than Reg E for your customer to be able to get their money back. So they can't have a higher bar. Now, in doing so, if they want to say, no, bank, you won't get your money back if we can't get your customer to sign this, that's fine. You might not get your money back then, is what it comes down to. And that happens frequently with third-party service providers in the Reg E world.
If a customer gets email fraud and is told to set up a Zelle account to pay to keep from being charged a larger dollar amount, are we liable?
So I just go back to, if I go in and set up the account, the Zelle account, tie it to my bank account, and Diane's the one that's trying to get money from me, and she's trying to tell me whatever to try to get me to send her money, and I hit the send button, I hit the pay now button, that's an authorized transfer. I'm going to change it again. If Diane steals my bank account information and ties a Zelle account to it and somehow finds a way to pay herself, I didn't hit the send button or the pay now button. She has done it by stealing my account information and connecting it to a Zelle account and then conducting transactions. Those are unauthorized.
Okay, back to UDAP. Can you comment on the authorized positive settles negative financial institution letter put out by the FDIC?
Oh, there's one put out by the FDIC. There's one put out by the CFPB. There's one put out by the OCC. I don't know where the Fed's at in this. I'm sure they're somewhere. Actually, I do know where the Fed's at. This goes back to 2016. Every, I want to say 18 months or so, something in that window, the regulators do an overdraft. The regulators do an overdraft webinar through the Federal Reserve's Consumer Compliance Outlook Live webinar series, if you will. And this is something that was first brought up, again, I want to say 2016, but it came up again in 2019, and it's been all over the news for the last couple of years. It's evolved a little bit. I really question how someone can even do an opt-in anymore. And maybe I don't understand so much how the payment systems or the payment processing works, but essentially it works like this for those of you that maybe aren't up to speed. First off, the authorized positive settles negative overdraft issue has to do with debit card transactions and overdraft fees. So as long as you don't have an opt-in, this is not an issue for you because you can't charge an overdraft fee with these types of transactions anyway. Those of you that have an opt-in, well, then this intersects with you. And so if I have my debit card and I go out and buy something and it's authorized against a positive balance, which I think is the only way in my brain that it would be authorized, but maybe there's something I don't understand on the payment processing side of it where that could happen. But I'm assuming that there's a positive balance, otherwise it wouldn't have been authorized. So when it's authorized, what they're saying is when it then actually posts to the account and the balance is negative, it causes an overdraft fee, that's unfair under Section 5 of the Federal Trade Commission, as well as the abusive under the Dodd-Frank Act, because the consumer does not have the tools and resources necessary to be able to make an informed decision and understand at all what's going on. The new flavor, if you will, based upon the CFPB and the OCC and the FDIC just in the last couple of days, is that I don't know if they believe there's a way that you could accurately or adequately disclose this and even get away with it. So I think this is another one. Stay tuned because I've read all three. I read it just before this program because I figured we'd get some of these questions. I still don't know if they think the opt-in's okay, if the opt-in's okay, because I don't know what you're opting into other than ATM transactions outside of debit card transactions. So that's our take on it today. We'll probably hopefully learn more about that in the next very soon. Let's just go with that.
So a follow-up, someone's asking, is there any way to avoid these authorized positive, settled negative transactions? And is it a matter of posting order?
Well, get rid of your opt-in. Aside from that, it would have to be something in how the payment systems and what you upload for balances works. Again, that's beyond our area of expertise.
If meeting regulatory requirements for advertisements or disclosures is no longer good enough, how can we still leave the door? How can we address UDAP risks? Do you have any tips for managing risks?
Boy, there's UDAP risks in everything. You can think all day long that what you're disclosing is good enough, and tomorrow it might not be. I mean, take the multiple representments thing. Many banks listening have been doing this for 100 years, right? You've had NSF returns, and you just assume that there's an NSF fee every time we return something. You're going to be charged a fee every time. Okay, I think that was clear, but apparently not, and now it's not good moving forward. And there was a time period here we thought, well, as long as we disclose it correctly, we'll be okay. And now the tune is, maybe we aren't supposed to have these at all. They're trying to do enforcement through guidance again, which is nutso, but that's what they're doing, and it's not traditional rulemaking. But that's the wild card that is UDAP when we have criteria that's not black and white all the time. And then this new abusive one under the Dodd-Frank Act basically has an either-or proposition as opposed to 3 criteria for unfair and deceptive in the traditional Federal Trade Commission ruling. So I'm not sure what's real safe anymore.
How about Reg CC? Can you address funds availability delays with mobile deposits?
So mobile deposits aren't subject to the Reg CC delay rules, if you will.
What areas do you expect upcoming exams to focus on?
Well, let me give one more thing before I go there. Let me go back to that mobile deposits thing. Reg CC doesn't go there, so it's not going to apply to the mobile deposit by way of the delay rules, but you should have outlined in your agreement regarding mobile deposits how you're going to handle and treat those types of transactions. That will keep you out of UDAP risk or UDAP trouble.
So what areas do you expect upcoming exams to focus on?
So from a deposit standpoint, my areas would be some of the things we've just recently been talking about. I think overdrafts and NSF fees, I'm going to combine them all in one, but both are on the CFPB's rulemaking agenda. They're in the pre-rule stages, so I think those definitely would be in the crosshairs. I think UDAP, and I think both of these overdrafts and UDAP under this umbrella that I'm sure you've all heard by now, this junk fees initiative, It's kind of this made up thing that doesn't need traditional rulemaking to call things out and make things happen. That would be my big three. Otherwise, there's not a lot on the deposit areas that are real high maintenance, high risk things. I mean, obviously advertising, but it's not traditional advertising rules that are getting us in trouble. We're following those, but they're sneaking in something that is UDAP related. So I think UDAP, overdrafts, and then just junk fees as a whole is going to be the things that they look very closely at.
Reg DD, what information is required to be on the renewal notice for a CD with a maturity of longer than 12 months to avoid needing to send a new TISA disclosure at renewal? Or is a new disclosure always required regardless of what is on the notice?
If it's an automatic renewing CD of greater than 12 months, it's the last part of that. They got to give the full disclosure.
Can personal bankers use iPads to help enroll customers in e-statements?
That'd be fun and it'd be easy, efficient, but you can't because that's your equipment. The whole point of eSign is that they'll be able to open it on their equipment. So just a quick refresher on eSign. In order to satisfy it, I have to, step one, if I'm the customer, I have to say yes. I have to consent and say, yeah, let's communicate this electronic way. Let's do that. And so I consent. Step two, I've got to demonstrate to you, this is the demonstrable consent part. I've got to demonstrate to you that I can view the format in which you are sending me the information. Not on your equipment, because your equipment, of course, works. So no, if I bring my own phone, or I need to start bringing my phone to these programs, I guess, because I need it. But if I have my own phone and you, hey, Jared, let's take a look at your phone, get you set up. That works. I bring my own iPad. That works. But it's got to be mine, the customer's, not yours.
When a customer opens an account online, when is the account deemed open? When the account is funded, when the account is funded and the bank receives the documents back that require a signature?
I'm not familiar with Reg DD going here at all and saying, hey, here's the magical time when it's open. So let's just connect some dots. All disclosures would have to have been provided. If you require any signatures, and I think they alluded to that, if you require any signatures, obviously it would be after that. But just think about a deposit account. Until there's money in it, is it really open? So if we do all of that and there's no money in it, can we really do anything? So the first deposit, maybe? I'm not familiar with any regulation that goes specifically there. And if we get into the BSA AML land, that's going to be a little different because of the CIP and beneficial ownership stuff. But I don't know of a magical time that here's exactly when it is.
On this one is more directed just at general overall CMS. What is the best way to implement a proactive environment so that compliance is involved in initial new deposit product discussions instead of finding out about the new product right before it's launched?
I tell you what, I wish we could get more people involved in this discussion, because I think if we did, more of the financial institutions out there would have better traction with compliance and more buy-in with compliance, because this is the base or the foundation of really getting things done effectively and efficiently in an organization. And I'm going to use a word, and if you want more on this, we have a ton out there available. We have a 6-part compliance management series. We've got some shorter versions of that, but the word is culture. You need to establish a culture of compliance. And what do I mean by that? There are a lot of financial institutions. So I work with a team of consultants that many of them go into banks just like yours, week in and week out. I spoke in the time leading up to the top of the program. We do reviews, and it's not that we're coming in to do an audit or cite things, but we want to find out what you know, what you don't know, and make sure you're not making missteps and help you move from good to great. Hey, that's our goal, is to partner with you and help you do better tomorrow than what you're doing today. And so one of the things that we see a lot of is, unfortunately, compliance, that's the compliance officer's job. And if that's the mentality in your organization, we need to start there, because we have to change that tone. And that tone needs to come from the top down. So it starts with who's ever leading your board of directors. And then that goes down to your management and business lines. And then, compliance is involved in that. But you need to make sure you've got a culture of compliance, which starts with making sure that we don't have the responsibility rests solely with compliance. They play a large role, no question. They're the ones that's going to disseminate information. They might give opinions and advice on maybe actions to take, and whether we should say yes or no to certain things. But ultimately, they're not the decision makers. But they help and enable people that are the decision makers, whether it's the business line management, the board of directors. And so what it comes down to is it's everybody's job to do compliance, and compliance is a resource, not the Department of NO, the Department of KNO, knowledge, if you will. They have information, and that's how they should be utilized and looked upon. Again, if you're hungry for more of that kind of stuff, and I get just excited talking about it, I know that my boss is listening behind the scenes today. That really gets him giddy, and he'd love to talk to you more about that. So reach out, and we can explore that with you.
This next one takes us back to the FDIC's guidance on multiple representment fees. I believe we have properly disclosed this issue. Regardless, if we perform a 2-year look back for restitutions, how many NSFs should we be concerned about to provide restitution? For example, if we find a customer paid 2 NSF fees for the same item, should we refund one or should we accept it and move on? I am curious to what guidance you're providing.
So if you're FDIC regulated, you got to do this look back. They do 2 years, and you've got to refund one of the 2 charges if it wasn't properly disclosed. Now, if you didn't properly disclose NSF at all, then all of them get refunded. But we're really looking for that time where the check was sent back, and then it was presented again, and then sent back again that second time. That's what the restitution is supposed to be for. That's what the look back is trying to identify. I want to go back to the first part of that question. What did they say? They believe they've disclosed it correctly. A month ago, I'd have been okay. I'd have been, yep, we could probably look to see if you disclosed that correctly. But in light of what I'm seeing that's being written by the regulatory agencies now, the flavor is, I'm not certain, not me talking, this is them talking. I'm not certain that even with disclosures that you can properly disclose this so that it's understood and doesn't cause consumer harm. That's not verbatim because it's laying over there on the floor on the other side of my desk, but it's pretty close.
Okay, this individual is looking for guidance on how to handle disputes from third-party payment providers such as Cash App and PayPal. And they said they've moved from referring their customer back to the third party, such as PayPal, to now they're handling them internally. They may suggest the customer contacts PayPal, but essentially, are you thinking that they should be handling these internally or able to pass them on?
Yeah, according to the guidance that came out at I think in December 2021 from the CFPB, and they have oversight over a Reg E, that if I hook up an app provider to my bank account and something happens within that scenario that's unauthorized, again, I didn't hit the send button, somebody has stolen my information, is now conducting transactions through that app provider. If that dispute comes to you, you have to deal with it. If they go to Venmo, Cash App, PayPal, whomever first, then they're supposed to handle it. But we all know how that's going. PayPal, Venmo, Cash App, they're all saying, go talk to your bank. They'll do a good job. And so they end up on your doorstep. Here's the thing. Since they're covered by Reg E, you can't say, well, why don't you go to the app provider first? Now, I know that's what the app provider's doing, but they're not regulated by the same people you're regulated by, even though the CFPB says they have to do that. I know you're between a rock and a hard place, but that's the way this game's got to be played right now.
This next one takes us back to authorized positive, settled negative. Do you think this issue will prompt a look back period as well, or can we just make a decision to correct going forward?
Well, if you read what the CFPB has done to the banks where they've identified this, they've required full restitution. Now, I don't know what their look back period was. I didn't read it that closely, but any bank they've identified with this, they've made them do restitution. So now we've got on record for the first time, written just in the last 2 days, the FDIC yesterday, the OCC today. Now, it doesn't necessarily, again, I just read them this morning. I don't recall. I don't think they get into either one of those about the doing restitution, but I would say the expectation, because it's a Section 5 Federal Trade Commission issue, as well as the abusive side under the Dodd-Frank Act, I would imagine that it would be the same as previous guidance, which would be do a look back and do full restitution for anybody who they believe you've done wrong.
Lots of Reg E questions.
Keep them coming.
Is the cardholder able to dispute non-fraud or authorized transactions past 60 days of the statement date at the bank's loss?
Okay, so the key word, authorized. If it's authorized, it's not going to be a dispute or an unauthorized transaction regularly because it was an authorized transaction.
How about if a customer gives out their online banking information and the hacker transfers funds out? Who is out the funds?
So this is guidance that the CFPB put out. If I'm induced by the thief, and their examples are, I give my account information, like my online banking. So Diane's trying to steal my information, and so somehow she has got me to be able to. I've provided her my mobile banking information. Now, I didn't conduct a transaction. I didn't hit the send, the pay now, the go button, but I gave her my credentials. And then she starts conducting transactions. Well, then she stole my information, and now those transactions are unauthorized because I didn't authorize the transaction. She stole my information and she did the transaction. Different than if I hit the pay now, the send, or the go button. Then I authorized it.
This one goes back to that one-click question under Reg DD. If a social media posting is related to a rate or product promotion, does it need to include a link to the full disclosure to comply with the one-click rule?
Okay, so if you advertise via a social media post, it's no different than advertising on your website. So it would have to follow all of the rules that you would normally provide. There's no special rules for Twitter and LinkedIn and Facebook and any of the other stuff that you could think of out there where social media information is exchanged.
This is interesting. So we have someone concerned about what about hashtags that might include the word like investments? Any thoughts on that?
No.
Okay.
I need more of a picture to be painted, I think, than just the word investments.
Back to the account, we had a question earlier with using free in the title. Is it safe to advertise the account as free if it's free with e-statements, but you charge if they choose paper?
You just need to be careful with the word free. Very little is free in this world, right? So I'm just trying to wrap my brain around what they're doing. So with e-statements, it's free. If you want paper statements, it costs. So then it's not a free account.
Right.
So it's an account that comes with a fee. So we have this account. If you have e-statements, we don't charge for statements. If you do want paper statements, we charge for that. So there's a fee associated with the account. It's not free.
And a spin off of that, they're saying if the account is called free and one of the requirements is that the customer has to sign up for e-statements within 2 months. If the customer does not sign up for e-statements within that time, the account is switched over to a different account.
I don't have a problem with as long as it's fully disclosed. You do what you say what you do.
Can I jump in here?
You bet.
You're
the advertising guru.
There you go. I used to argue all the time that was a free account. I've lost that argument and the risk is too high. So I agree with what you're saying, Jared. I believe you should be able to say, here's the parameters. And if you follow the parameters, it's free. Again, it's kind of a shift in mentality. Maybe 15 years ago, examiners started citing it. And again, it doesn't matter what we argue, we're losing the battle. So I recommend you not do that. Set up one that has that, set up another account that has a fee for statements. And so if you want to talk more about culture too, I was getting all giddy.
Right?
I'll go back to you.
No, I'd love to hook them up with you and get them in front of you. If you've not heard Dave talk about compliance culture, and there's compliance management in there too. I tell you what, if you're a compliance person, and even if you're not, it just gets you excited about doing what you're doing when you get everybody going in the same direction, and you need to check it out. Really do.
How about if a customer gives their debit card to a family member and the family member uses the card for more than our customer expected? Would this be an unauthorized transaction?
Okay, so I've got a 16-year-old. He's got a pickup and it needs a lot of gas. Okay, and he doesn't have a JOB yet. So this goes on at my house. So I'm going to tell you how it works here. I have done this before. I've given him my debit card. So let's just play this story out. This won't be totally true. I'm going to embellish a little. So I give my son my debit card. I say, go put some gas into your green pickup truck. And he goes and does that. He's got my card. Let's say he decides to stop off at the bowling alley and somewhere else fun on his way home before I get my card back in my possession. I'm sorry, those are authorized transactions. When I gave him my card and said, go forth and buy gas, and he goes beyond that before I get my card back, those are authorized. Once I get my card back, if he then takes it from me without my permission and does something beyond that, those are unauthorized. Now, there's some stuff in Reg E about how they want your customer to tell you when they get their card back in their possession, but nobody does that. So I don't think you can fall back on that unless you're truly doing that. And I don't know that wording off the top of my head. Dave he could come in here if you'd like to, but that's a tough one. But when I give the card, until I get it back, everything's authorized as long as he's in possession of that card. Now, I know the other thing everybody wants to say, well, we have right here in our cardholder agreement, do not give your card to anyone else. Reg E doesn't say that. Therefore, you can't hold your customers accountable for something that goes above and beyond Reg E.
How about if a customer buys something on Facebook, but they never receive it? Are we required to allow them to dispute it and give them provisional credit?
That's an authorized transaction. I'm sorry they paid and didn't get what they liked. Again, if they'd used a credit card, they might have an opportunity through Reg Z provisions. I'm not an expert in that area, but that's why you hear that all the time, but it's not a Reg E thing.
Are there any situations where Reg E would apply to a business debit card?
Not that I would let happen. I would not provide Reg E disclosures to any business customer. Now, here's what happens. I open up a consumer account with you. Today, I don't have a business but you know what? I'm going to start mowing lawns and I'm going to put all that money through my personal account. And now, even though it was opened as a consumer account, it operates like a business account. In that case, because I got Reg E disclosures, it's going to be covered by Reg E. But if I come in to open up a business account, you shouldn't give me Reg E disclosures. Now, you'll want to tell me how you're going to handle my transactions if there's fraud or unauthorized transactions involved, but that's through your account agreement, not via Reg E. So you'd still want to go there, but not follow necessarily all the red tape in Reg E.
If we currently have the ability to opt in customers, but choose to no longer offer that service, what do you feel that process would look like? What notifications would we have to give?
Oh, off the top of my head, I don't believe that there is a required notification when the bank shuts down the opt-in. Do you recall, Diane?
Not that I can.
I don't recall one either. So I think you could theoretically just take it away and not say anything. Because what's really going to change for the customer? The same transactions that were going to be paid probably get paid. They still probably get overdraft protection from you, I'm guessing, some sort of cushion of funds, because there's still checks and ACHs out there, and they're referencing, I'm guessing, the same dollars for overdraft protection. It's just you won't be able to charge for the ATM and one-time debits that come through. So I don't know that a whole lot changes for the customer. So would you really have to tell them anything? Probably not. Now, customer service, maybe you do. The way that question, opting in customers, that just sounds bad. I'm going to opt you in, Diane, so I can charge you. That's why the consumer advocate groups, that's why even the regulators who helped write these rules have problems with this because of how it's being accomplished. I mean, just think about that. Who's choosing to opt in so that the bank can charge them? I wouldn't.
You're no fun. With the CFPB policy statement on abusiveness, do you think mouse print disclosures in marketing will be criticized when a regulation does not specify font size?
The abusive is, so the regulation, when you say the regulation doesn't specify, what we're talking about is Truth in Savings and the Truth in Lending Act, right? Because that's the primary regulations that deal with advertisements, right? So those haven't changed. What's changed is we've got a new player in the gray space, in the gray area. We've long had Section 5 of the Federal Trade Commission, unfair, deceptive acts or practices. Now we now have abusive. Unfair and deceptive hasn't changed. There's still 3 criteria for each one of them. Got to check all 3 boxes for each one if we're going to try to apply either one. Abusive is the new player, and that's what that policy statement is about. And that has been, very political, because it's gone from way over here in the Trump administration where nothing to see here. We already have traditional UDAP. We're going to kind of ignore this. to now we have the the Biden administration and new leadership at the CFP that says, oh, there's plenty to see here. We're going to write a whole policy statement on what we think abusive is, and we're going to use it. And so the pendulum is swung, which means there's a magnifying glass now being put on the mouse print. So you might be compliant with Reg Z or Reg DD, but in the eyes of someone from that abusive lens, you could have an abusive act or practice. And remember, that bar is a lot lower than traditional Federal Trade Commission Section 5, unfair or deceptive. That's one of the things in our webinar on UDEP that we hash over and over again. Because that bar is an either or rather than a three-part, it's a little easier to meet up with.
Do DBA accounts fall under Reg E?
Well, if they're opened up as a business account, a DBA business account, then no. But again, if I've opened up my consumer account and I was a consumer and now I've decided to start funneling or running business things through my account, what you should do in that case is go to me and say, Jared, it looks like you're using your consumer account as a business account. Let's get you into a business account. Don't give me a Reg E disclosure. Okay, and that way you keep my consumer account in a consumer account. You don't worry about electronic funds transfers that are business related that might have disputes associated with them if you can get them into a different account.
How about what if the business is getting a statement that includes the Reg E language on the back of it?
Again, I wouldn't do that. If it's a non-consumer account that's not subject to Reg E, don't give them Reg E stuff. Because then I think I might be covered. It's bad customer service.
This one takes us back to authorized positive, settle negative. We don't offer an opt-in and do not charge the fee. Are we governed by the authorized positive, settle negative standards? And they say their process is clearly disclosed.
So they're not an opt-in bank, which means they cannot ever charge an overdraft fee for any one-time debit transaction or ATM transaction that causes the account to be overdrawn, which means I can't have an authorized positive settles negative transaction. So shouldn't be subject to that rulemaking.
Do we need to be concerned about UDAP on business accounts?
Yes. Now, is there a lot to go on historically? No, but there is a Federal Trade Commission. Gosh, I wonder if I have it right real quick. I might be able to reference this. This book was right here. Let me see if I can identify. The CFPB, or not the CFPB, the Federal Trade Commission. Here it is. I'm going to just read this. This is from the FTC. We are not constrained by whether the transaction is for personal, family, or household purposes. That our organic statute, the FTC Act, allows us, this is the FTC talking, to address unfair and deceptive practices, even with respect to businesses. That was something the CFPB put out, or the FTC put out just in the last year or so.
And this individual is looking for clarification under Regulation E. If we issue Visa cards, do we still need to follow their liability policy? So sometimes it might not match up with Reg E.
So Visa and MasterCard and other branding like that, they have their own rules. You can apply those rules to your customer if they are higher, if the bar is higher than what Reg E offers for the customer to get their money back. Now, what that means is you might not get your money back. Again, that happens often. So you might not get your money back, but if it's a legit dispute, you're still going to give the customer their money back, even if your customer doesn't comply with something that Visa or MasterCard would like from you, if it's truly an unauthorized transfer. Now, they might not get zero liability. So Visa has a zero liability criteria chart, right? So if your customer doesn't meet zero liability, which is a better deal for them that Visa provides, well, then you go back and revert to Reg E and you do the 5,500 tiered limits of the dispute process. So if Visa is giving a better deal, to get it, they have to do certain things. That's fine. But if they don't meet that criteria, then you fall back on Reg E and you have to follow that to the letter. I tell you what, we're coming up, believe it or not, folks, at the top of the hour. I want to do this. There were a ton of Reg E, there was a ton of overdraft, and there was a ton of I forget, I had another one in my mind here, advertising, and maybe some others too. For all of those, if you find yourself hungry for more, we have training available on demand, live upcoming. We'd love to have you be a part of and help you provide solutions in those areas. I think one of our top sellers is that Reg E one that we do every year, and nothing has really changed as far as the regulation is concerned. Well, while I have your attention here, before you all go, I'm going to share my screen one more time. I've got something important I want to share with everybody. So give me just a moment here. I'm going to share my screen, and the important item is I want to make sure that you get registered and signed up for the next version of this. We are going to be covering the BSA AML Q&A on July 18th.
We
What's
lost
that?
your screen. We had you, but we lost it.
Let me try again. Are we there now?
No.
I have no idea. Give me one more second here. Darn it. Share screen. There we go.
Okay, we're seeing your desktop.
There we go. Okay, so July 18th, we're going to be doing our Bank Secrecy Act anti-money laundering. Actually, it's going to be Kevin Edwards, my teammate. He is our BSA AML guru. He gets into all the, I guess, cool and uncool things that are associated with that. And we want your questions and have fun, just like we did today, going through those questions and trying to provide some plain English answers to it. So make sure you get registered for that. It's already out there. The link should have been in your packet at the last page as well. Let me do this in closing so we can get you all back to what you do so well, and that's serving your customers. There's a short survey, 5 questions. Trust me, it'll take you less than a minute. Give us a little feedback today on how we did. So if you would just take a moment, it's probably showed up in a separate browser behind the scenes. You'll also be notified, since you were registered for this, you'll be notified about the recording. This was recorded. I know that some of you might want to go back and listen to bits and pieces of this. We tried to get as many questions as we could in that 1 hour time frame. I want to thank our team, Diane, Kyla, Amy Kay, Dave, for helping out and making this process work the way it did. And I think we set a record today for the number of questions that were answered. So with that, thank you. And we're going to let you get back to your customers.